Welcome back, guys. This is a kind of onboarding for new students who have just come for this course and they have not gone through the previous forex section that was covered. In this particular session, I want you all to reach a common ground wherein you would have realistic expectations about this course, what we are going to cover in this, and what should be your mindset going in for this course. Before we begin with the course part, please go through the risk disclaimer. Whatever I cover during this course or this presentation, this is meant for educational purpose only. This is not a financial advice. And before making any investment, please exercise your due diligence and assume full responsibility of your decisions. Okay, so the purpose of this lesson is basically to get on board the new students in a smooth and faster manner, because earlier there was a lot of content that I created for forex section of funded trading, uh, but then we transitioned into futures or index futures trading. So those who were continuing from forex, they had a very easy transition into index futures. But someone who comes in new finds it a big issue to go through the entire content that has been posted so far on the forum. So this is my attempt to rather start from scratch and get all the new students on board faster. uh, all the previously posted content that doesn't become invalid or that doesn't become obsolete when we start with this. In fact, that is also a good educational resource. So while you are getting familiar with the content and progressing with this course, I would still encourage you all to go back to those live sessions, watch those lessons, and during the time when I'm not putting out new content, use that as a foundation which can help you, practice in your reading skills. I want to have very lean content because all I have seen so far is most of the courses on the internet, they are kind of fluffy. They put you down rabbit holes, and certainly they are not very conclusive, and a lot of unnecessary details are being put. So over here, my aim or endeavor is to keep content relevant to your trading skill. I'm not trying to create fillers or extend the amount of time that you require for learning the skill. Uh, then I'll also outline a learning path that you must follow. So let's lay the foundations with realistic expectations as to how you are going to go through this course, what you can achieve, and what should be the timeline in which you can reach your expectations. So let's start with knowing what a funded trading program is, and why should you even be interested in it. So there are certain companies out there called as the prop firms, proprietary firms, who have access to a large capital uh, with them. What they're looking for is people who have trading skills, who can actually invest their money into the markets and make profits for them. So that they are doing through the program called funded trading program. So basically, they are looking for traders who have trading skills, and once these traders are able to, make profitable returns, the profits are basically split between the company and the trader. You can see a lot of companies are offering the profit split of 90%, and going in, it becomes kind of a red flag. Why would a company pay 90% of profits made on their fund to you? So the answer to this is some companies, they route your orders, like that they're basically copying your orders in their own real accounts. So they are also being benefited by parallelly copying your trades on a larger sum. So you may have just a $25,000 account, but they would be scaling it up for their own, let's say, $500,000 account or maybe more. So while you would be making a profit of, let's say, 750, their account is making a profit of 7,500. So that's the way they are paying themselves. But other than that, and they are not doing it when you are in your initial stages. They are observing your activity for a larger amount of time. When they know that you are consistent in your trading, that is when they would head towards that step of copying your trades. So how does that work? Basically, you have different account sizes to apply for. So when you approach a company now, that is through their website, they have these programs already posted, wherein the capital size is already mentioned and what is the criteria that one has to go through, like how many maximum contracts you can trade, what is the profit goal, and all the rules that are in place. So they have something called as a monthly subscription for access to that evaluation account. So once you complete this evaluation, that is when you reach the profit goal, uh, maintaining yourself within the conditions that they have placed, you get actual account to trade with. So if you have applied for a $25,000 account, once you clear the evaluation, you get a price action account or PA account for trading, and any profits that you make in that are available for split as per the conditions again laid down by the company with which whom you are trading. Now you can see over here that this is $147 per month, but again these rates are reduced further with certain um, offers that they present from time to time. So I have also bought these similar accounts at even $14 or $12 or lesser. So when you apply for these accounts during those promotion periods, you can buy it as low as 14 to $15. And generally, they have round the year offers wherein they offer 70% discounts on these rates. So it's like below $30 that you can apply for this evaluation. Why you should be interested in it? Because it's a new way of getting involved in the markets. Presently, you must be thinking of trading as a way of investing your money in the markets. So for investment, most of the people, the common people, they're not able to have access to large amounts of funds. Someone might, muster up 1 lakh, 10 lakhs, 15 lakhs, 20 lakhs, but beyond that, it's very difficult for a common man to, have larger capitals like 50 lakhs or uh, more. So, and when you are using your own capital to trade markets, you are putting your own capital at risk. But in the funded trading program, what you are actually doing is you are using the funds of the proprietary firm, and whatever returns you make on that, that is what is being split with you. Here, the risk is basically assumed by the funded trading company. Now, you may think that why would a company risk its own funds and only share profits with you with no liability? Well, they have programs in place which keep a check of daily drawdown or any uh, trailing threshold, wherein if your equity falls below that acceptable threshold, your trading activity will be halted automatically by the program. So they have those safety features in their own programs, which do not allow you to reach a particular level of acceptable loss. So whenever you are profitable, you get paid. But if you go below the threshold that is acceptable, you won't receive your profits. Plus, you might lose rights to trade that account. So in that case, you lose the subscription that you have paid. And in case of a price action account, you might lose your activation fee also. So that's the safety net that they have for themselves. So when you have access to larger capital, now just imagine making a return of, let's say, 10% on $25,000 account. So that would be like $2,500. But let's say you were trading with your own capital of 10 lakhs. Uh, I'm just giving you a hypothetical scenario to imagine. So with 10 lakhs, if you make 10%, uh, you would have 1 lakh rupees as return. Whereas over here, with a $25,000 account, when you make 10%, you have $2,500, which amounts to, um, you know, mm, let's, that's about 2 lakh 7,500. So that's a larger return for the same amount of work. So it's always beneficial to have larger capital, because even smaller returns on large capital are way more in terms of money when it comes to making returns or money from the markets. So mustering large capital by your own self is difficult, but since these companies are offering you these access to the capital, I think a good trader can uh, really make a lot of money from these markets using these programs. That is why you should be interested in that. But it's not a get rich quick scheme. A lot of people come over here and they start, applying for these evaluation accounts like a lottery, and they are placing random trades trying to clear these evaluations. Uh, One might clear an evaluation and get a price action account, but again lose that price action account because they are not consistent with their trading. So rather than making money, they are actually losing a lot of money through these evaluation programs. So once you learn this trading skill, then these programs would be of any help to you. Without the actual trading skills, where you understand how to trade, how to manage risk, how to manage your trades, how to actually get the returns on a consistent basis. Without all that knowledge, you cannot make any profitable use of these evaluation programs. So it's not a get rich quick scheme. You have to put in a lot of effort to learn this trading skill. Uh, at the outset, let me tell you, don't expect to apply for one of these accounts within 6 to 8 months or even 10 months. I would rather suggest you start applying for them after 1 year, when you have actually practiced so much, when all your skills are at its place. You understand the risk management, you understand how to analyze these markets, you understand how to manage the trades. So when you have that entire knowledge, and when you're not dependent on anyone including me, when you can take your own decisions to place those trades, that is the time you can actually think of getting into these programs. So until then, keep practicing, and once you reach that level of skill, then go in for these programs. But let's consider a question. Can it really replace your job? So before I answer that question, let me tell you uh, what I intend to deliver through this course is a way to make monthly return of 6%. So when you have that skill, what does that 6% do for you? Let us consider that. Let's say you apply for an evaluation account of $25,000, and you are able to clear that evaluation and actually get a trading account worth $25,000. So when you have that and you are able to make 6% return, that amounts to $1,500, which is equivalent to 1 lakh 25, 24,500 rupees right now. If you apply for a $50,000 account, you have $3,000 return. Again, if you have a $100,000 account, that becomes 6,000. So the return of 6% depends actually on the account size that you are uh, actually going to get. So larger the capital, larger is the return, and this is the amount that you would be making with one single I mean, funded account of this size. But the companies also offer you multiple accounts that can be traded through copy trading. So with a copy trader, you could be linking like 10 accounts of $25,000 size. So one by one, when you keep adding multiple accounts to your what you can say portfolio, your capital per se will start increasing. So with 10 accounts, you are now having $2.5 million over here, and the returns would multiply in a similar way. So nothing stops you. There is no upper limit for this. Let's say a certain company stops you at 10 accounts. You are free to trade with any other company which can offer you funded accounts. So the upper limit is not set here. You could be trading with multiple funded companies, having multiple accounts, and still trading the same thing, and still aiming for a very small percentage of 6% return. And some of you who are actually used to trading, you would say 6% is a very lofty goal. But again, I'll cover the mathematics behind how I want you to achieve this 6% return. It's not very difficult. It's a low hanging fruit that is possible to be achieved every single month, not right from the next month or the first month of your, getting into this course. When you go through the entire program and when you really learn the skill, 6% is not a very big target to achieve. So let's go behind the mathematics for 6% return. In this course, we are going to deal with index futures called S&P 500. So the contract that we'll be trading during this course is E-mini S&P. So the standard contract is called as E-mini S&P. And there is a micro version of it, micro E-mini S&P. The relation between these two is the micro contract is 1/10 of the standard contract. Sorry, sorry. So don't worry on the semantics over here. That will be covered in the basics part. But this is just to amplify over here what is the mathematics behind making that 6% return. So what I'm going to teach you to start with is how to make 5 points on this index every single day. On an average, this index moves about 40 to 45 points in a day. There are days when it goes even beyond 70, 80 points, and some days it might even touch 100 points. But all we are looking for is how to capture 5 points per day on a consistent basis. So there are 20 trading days in a month, and it is possible to trade every single day. But I advise you all to avoid certain days when it is difficult to you know uh, work within that framework, especially when you have very limited experience. With my experience, I can still trade every single day and make that 5 points every day. But someone who is starting out new and who doesn't have any background of how to do this, it's difficult for him to make that 5 points every day. So let's say we get about 12 days to trade in a month. And why 12 days? Basically, 3 days every week. So for 4 weeks, you are able to get 12 trading days. So if you are able to make that 5 points per day, then you'd be able to make 60 points in a month trading 12 days. But what do you need to make the 6% return? All you read is 30 points on a standard contract of ES. Now, this is a micro contract, and when we trade, I'll show you. I gauge, basically make a gauge wherein you do not just trade one single micro contract, because that is really very small. For 5 points, all you will be making is $25. So that one micro you'd be using while you're practicing how to implement the way I analyze the markets, how to practice the trading, placing orders and all. You'll be using single micro, because over there your focus is capturing 5 points and not making money over here. But when you graduate and move ahead and learn the method, then you will put the money behind all the trades that you actually place. So you will not just place a trade with one single micro, but you'll be using anywhere from 1 to 10 micros. So that would be equivalent to actually making that $250 on 5 points. So all you need is basically 30 points, whereas you are capable of making 60 points. Now let's be realistic and expect some losses to come in during these days. So even if you lose on half of your trades, you would still be able to make that 30 points. So that's the rationale behind making 6% and the mathematics behind all that with the index trading. You're not trying to hit home runs, or you're not trying to, make crazy amount of trades and risk in this market. You're trying to do it with low hanging fruit, which you can achieve by doing less, not by doing more. So there are certain commonly asked questions that people ask me at the outset when they come in for this course. So let us cover them one by one. The first thing that bothers people is they are worried as to they do not have any background in trading or finance, and uh, they wonder if they'll be able to learn this, because uh, everything is new. But let me tell you, you can absolutely learn this skill without any background in trading or finance. You don't need anything. All you need is being covered in this course. There is hardly anything else that you need to refer to outside this course. And most of the information that is available today through Google or YouTube or everywhere, it is mostly misinformation, or it is a info overload. You won't be able to make any sense out of it. I do not say that you won't learn anything there, but trust me, you don't require anything from outside. If there is anything else that is required, I'll point you to that. Over here, my focus is to just cover those things which are relevant to you learning how to trade. If it is not relevant, I'm not covering it here. My aim is to keep the content uh, very, how do you say, lean, without adding any fluff to it. Whatever I cover over here, it is really mentioning it in the course. And a word of caution to all those who already have some sort of background in trading and they have been trading with other concepts. Please do not try to blend your concepts with whatever I cover in this course. It doesn't work. My suggestion is learn how I'm using these concepts in its own pure form. I'm sure you will find value in this. But if you try to blend with your own concepts, I won't guarantee success to that process. Rather, it would delay your own understanding in this content. It really hampers the understanding. of these concepts. Next question is, how long will it take for me to learn this? Uh, uh, Most of the people are in a hurry to learn this skill, and waiting these days has become a very difficult thing. Especially with YouTube Shorts, people are expecting the content to be very short, not very descriptive, uh, and attention spans have reduced. So that impatience, if you have it, is not going to work. You have to understand that trading, like any other skill set, uh, it requires a lot of practice, a lot of experience to actually master it. So, my suggestion is, if you are absolutely new, give yourself at least 1 year of time to learn how it works. Thereafter, you will only, build up your prowess in this skill, because 1 year is basically just to allow you to learn how to do it. But thereafter, with your experience building, your accuracy is going to skyrocket. Trust me, it gets better with time. So after 1 year, the second year is going to be very, very, how do I say it? It's going to be really good in terms of your trading. Second and third year, it's like going to go through the roof. So uh, give yourself time to learn the skill, but can you do it in lesser amount of time? I have seen people who have accelerated their learning within, let's say, 3 to 4 months or 5 months. So I don't say that it will take an entire year for you to learn how it works, but between 6 months to 1 year, it's good enough for you to learn it. Just know that everybody develops at a unique timeline for themselves. So do not try to compare yourself with others. Your progress is going to happen in its own time, because not everyone uh, you know puts in the same amount of work. Not everyone, or let's say some concepts that don't click with everyone immediately. It takes time for people to grasp these concepts, and someday it just clicks. So you might feel that I have been going through this for a month or so and I'm not able to put everything together. uh, but someday, or let's say after a few days, you will see that everything starts you know dovetailing with each other, and it works like Swiss masterpiece. So that's basically in terms of time that you should realistically give yourself. Uh, One thing I need to mention over here is, it's not the concepts that are hard to grasp, but when it comes to trading, it's mastering your own mind is what is the biggest hurdle that you will face. So somebody who does it faster, he'll be able to go through this, in a faster time frame. But those of you who struggle with your own mindset, with your own mind, being undisciplined, you will take a little longer to get this. We are in India, and how can we trade the US markets? And if we can, how much money is required to open an account? So let me tell you, we do not open any account with the US brokers. What we have is an access to a funded account to place trades on behalf of the firm who has an account with broker. So all you'd be doing is placing orders on behalf of that firm. And the only money that we pay to that firm is basically evaluation fees and activation fees once we have cleared the evaluation. So typically for $25,000 account, the evaluation fee is between 14 to $30 per month, and the activation fee for $25,000 account is $130. So that's you know, let's say, and yes, I must mention here that the evaluation fees that I have quoted over here is a subscription based evaluation fees. So it will be charged every month until you clear your evaluation. With whatever I cover in the course, 1 month is more than enough to clear that evaluation. That's why $14 to $30 is that one time evaluation fee that you'd be spending. Because once you clear your evaluation, you don't have to pay that subscription again. But even if you take more than a month, let's say you go in for 2 more months or 2 months to clear that evaluation, you would still be spending less than 15,000 rupees on that entire process for the evaluation account and the activation fee. So it's not going to break your back. It's very much within the means that you have. How do I get paid, and what is the tax treatment for the income through funded trading? The company shares its profit split with you. In most cases, it is 90% profits being given to you. And it again depends on the company that you are trading through. Some companies offer you a payout once in a fortnight, that is twice a month. Some companies offer you a weekly payout. Some are also offering on a monthly basis. So that depends from company to company. But whatever profit split you get, that amount is transferred to your account through PayPal or wire transfer. Earlier, there used to be a service called Deal, DEEL, but that has stopped working with some of the funded companies. So presently, PayPal and wire transfers are still functional, and that's how you get paid. You get paid as an independent contractor. You get an invoice to that effect, and whatever amount you receive through that has to be shown as your additional income from other sources. And whatever tax bracket you fall in, you pay your taxes as per that. There is a way to trade as a private limited company as well. That would require some more discussion on my part with you, how to do that and all. But there is a way to do that. So you form a private limited company and then you apply for that evaluation as a company. So whatever is paid to your company now, that tax liability will be as per the laws applicable for the companies as private limited companies. So we'll discuss that in future. You don't have to worry about it. But this is something that comes to everybody's mind, that how would I pay taxes on this? So you just pay the tax, whatever is due to you, as per the income tax bracket that you fall in. So don't have to worry about anything. Now, can you give me any reference material that I can go through to speed up my learning? Most of the people initially, they wanted some reading material. Let me tell you, getting the skill set requires more amount of practice rather than you watching a lot of videos. You have to sit in front of the chart and you have to apply your own mind and practice with it. That's it. That is what is going to speed up your learning. But in any case, let me share if there is any other resource that you want to consume from the internet, then it is basically from my mentor, Michael Huddleston, who has a YouTube channel. The link is already there on the screen. So he has posted a lot of content on YouTube. It's all free to watch. And the mentorship that I went through, all the lessons are already posted as playlists on his website. The content is vast and uh, it is basically covering everything that is required by a trader. Uh, the only word of caution is it is easy to get lost in that content. So do not, you know, what you can say, uh, be bogged down by the content. If you want complete understanding of how the markets work, and it's not just about forex. He also started with forex, related lessons, but then switched on to all other asset classes, the bonds, the commodities. He's covered everything. But what I have experienced till now is most of you are not even able to go through the entire content that I have posted. So, which is like, as compared to what he has posted on his YouTube, it's very minuscule. So, but if you still have time and you want to learn more, you can go through the channel that I have mentioned. But other than that, there is no other place where you can get authentic or good content which is worth learning. There are a lot of students like me who have gone through the mentorship. They have created their own explainer videos, simplifying the ICT concepts and all. I would rather advise you to stay away from those explanations because it's their understanding of ICT concepts which may or may not be correct. And since these days there are a lot of people who are making these channels, not everyone would be so well versed in that content. So stop chasing the content that is posted over there. Whatever I cover over here, that is all you would need to make a trading model for yourself. Once you make that and master it, you would start implementing that in your trading to make some consistent returns. And thereafter, if you feel you want to dive deeper into this, you can explore the content that ICT has posted on his YouTube. So that's my advice to you. The way he has prepared his content is basically it is meant for people who are diligent. You cannot be casual in your approach when you go through whatever he has created. You have to make a lot of you can say, and you cannot just watch it, binge watch like web series and expect to learn from it. You have to put in a lot of work to understand it. But if you do that, nobody can come as close to the markets as he brings you into it. The end goal is to learn trading as a skill. And once you have that, then it's not just the funded trading part that is available to you. A lot of options open up. You can trade with your own capital. You can have your own company, uh, set up and accept funds to trade, or you could form a limited partnership with high net worth individuals and trade on their behalf, or you could provide signal service. So there are a lot of options available to you once you have this skill. So your aim should be to acquire this skill as early as possible and the best possible manner. So that's all for this particular session. The next one will be covering the basics of trading. I'll cover, or let's say, how I'll help you set up your own, PC and the programs that are required, the resources that are required in the next session. I will go in from the basics and I'll cover all those things which are kind of a obstacle for a newcomer when he is using all these softwares and tools. So see you in the next session.